Hello, everyone. This is Sebastian McMahon from IA Financial Group. I'm back with another edition of the Weekly Economic Review, this time for the week ending August 19, 2022. So let's start, as usual, with a look at this week's markets at the close on Thursday. So negative week for bonds. Looks positive here for equities, but as I am recording this on Friday morning, futures are pointing lower for the open. So maybe when the day is said and done, it's going to be negative for both bonds and equities. At least this is what it's hinting right now. The price of oil down, Canadian dollar lower, and the price of gold under pressure again. So inflation is again the topic. So I feel like I've said pretty much everything on it, but this week we had Canadian inflation coming out. Pretty much all exactly the same signals as last week in the US, but still, I mean, it's important. So I thought I'd bring it. So likely the peak is in June, or was in June, for the total inflation rate. Gasoline prices have been falling since, and this is an important part of the puzzle. So we will see if we keep on moving down. Central banks will remain very serious with their intention to bring inflation down all the way to their target range of 1 to 3%. So they'll still be hiking rates. So even though we had a peak likely in June, I mean, they're going to be taking their finger off the panic button, but they will still be tightening. So nothing really changes there. And if we go to the next slide, well, inflation in goods versus services. Well, goods are starting to turn around because of the price of gasoline, but service inflation is still rising because wages are still accelerating, and central banks will likely focus on that because this is much stickier than goods inflation. So nothing changes there. Same view. Central banks will still be hiking, so still be careful before starting to think that there's a pivot from central banks. We remain careful on that front. So looking at markets now, and I'll be quick on that. I brought a few technical charts here. I'm not a technician at all. I read many technicians out there in environments like this one where there's volatility, maybe turning points. Technical analysis takes some importance, and just because there are just so many players out there, mostly quantitative funds that make decisions based on technical analysis, it has some importance for market movements. So August is typically a very low volume month, and it has been again this year. So that means you need to be careful before interpreting the signals from the market in a very low volume month. Let's see what happens in September. But technical analysis tells you that if when you're in a down market, the 200-day moving average is often considered as a resistance. So you need to cross above it with some, conviction, with some force, to maybe signal that the market is turning around. The same thing when you're in a long-term bull market. Usually the 200-day moving average acts as a support, so you tend to bounce off of it and rebound. But in a bear market, you tend to knock your head on it and then reverse lower. So the 200-day moving average was tested this week. It seems so far that it's failing to move across it. So maybe it's sending a signal that we should expect some volatility or some downward movements going forward. Again, this is just technical analysis, but it does support our thesis that fundamentally it's not a good moment to be taking lots of risk, and rallies happen and you need to fade these rallies. So this is still the positioning that we have. We remain on the defensive side, but we're open to changing our minds if we have strong signals, and it doesn't seem like we have one here based on technical analysis. We're also headed for the two weakest months in terms of returns. So seasonality is not kind to September and October. So two charts here on the left, you have the average return for all of the months of September since 1928. Of course, September and October have been skewed by, Black Monday in October 1987. 2008 was also a tough period for a tough year for those 2 months. So, but still, September and October tend to be more negative than others. And if you look on the right, well, it's the percentage of the each month that has been positive since 1928. So February is the worst month of all, but if you look at September and October, you're below average too. So seasonality suggests that the rally could stall in the coming months. So we'll need some very good news for the market to keep on rallying here. So that brings me to what to watch next week. There's going to be the S&P Global Manufacturing and Services PMI, which are preliminary readings to the ISM, which comes out early in the month. But it's important now to have a very strong, a very timely reading of the state of the US economy. This will help. GDP growth consensus for Q2 is that will be at minus 0.9. Of course, there's a revision. We already have an initial reading. We know it's negative. The revision should remain negative. We'll have the University of Michigan Sentiment Index, but likely the most important data point next week, let's say the most important event, will be the Jackson Hole Economic Symposium. This is a symposium where central bankers and academic researchers are there to trade ideas, to talk, to discuss about monetary policy, and it's often used as a platform for central bank leaders to pass important messages. And Mr. Powell will be speaking next Friday at 10 a.m. And rumors are starting to make the rounds that he would use this occasion to send a strong message to the market that there's no Fed pivot at all yet, that they're very serious in fighting inflation. And this could be a market event next week, could cause some volatility, maybe could cause a downward movement, or if it doesn't talk about that, maybe that could support market sentiment, but it's going to be an important part of next week's action. So next Friday, 10 a.m. So that wraps it up for the week. ia.ca/economy. You can follow me on LinkedIn, on Twitter. We have new episodes of the podcast that have been recorded this week. So we have material for September and October. So if you haven't subscribed already, please do so. Give it a try. We're bringing new material every single week, and we'll be continuing for as long as we can, as the eye can see. So, I mean, if you want to jump aboard, I think there's something interesting there for anyone out there. And Economy and Finance 101, new material is posted every single month. So I strongly encourage that you give it a look. So thanks for following us. Always a pleasure to serve you, and I'll be back again next week.